Your market news now. The rand strengthened against the dollar in early trade after efforts by regulators to allay fears over the global banking system fueled risk appetite. Earlier, the currency traded at 18.29 against the dollar, 0.1% stronger than its previous close. Investors are likely to turn their focus to the central bank's interest rate decision, that is the Reserve Bank, on Thursday, with markets expecting a 25 basis points hike. Meanwhile, global drilling company Master Drilling declared a higher dividend after reporting a rise in profits for the year. The company is valued at 2.1 billion rand on the JSE, and it operates in Africa and the Americas, among other regions, and provides services to companies in the mining, civil engineering, infrastructure and energy sectors. It was launched in 1986. The company listed on the JSE in 2012 and employs just over 2,000 people. To talk to us about how the markets are digesting some of the efforts made by regulators when it comes to the banking sector, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. I mean, we've seen these efforts come through from regulators when it comes to instilling that confidence back into the market following what we saw coming through from the banking side. Is that fully filtering through when you look at your screens, that sentiment coming back?
I think so. So, I mean, if we're looking at globally, I think cautiously optimistic is probably the best way to kind of say how things are at the moment. I think the market is waiting for some good news, and then I think you'll see quite a big move like we saw in January. And even kind of amidst this kind of banking crisis or issue that's kind of going on at the moment, S&P hasn't really moved that much. So I think the market is very well aware of kind of things that are potentially negative around the corner, but I think it wants to be optimistic, and I think investors are hopeful that things are going to kind of turn around in this kind of second half of the year.
With that said, I mean, what do you see as a risk to equity markets? Are you expecting another shoe to drop here? Well,
with the last 2.5 years, there's always been something around the corner, which has been a bit terrifying, but I think the kind of usual suspects, I guess, is inflation, monetary policy that follows that, so interest rates. You've obviously got the ongoing war in Russia. Locally, you've got kind of issues around Eskom, but I think those are kind of the things that are driving it at the moment. But again, at the moment, it's all eyes on what's happening in the banking sector in America. But again, the market's cautiously optimistic, and I think it's hoping that things will pan out positively from here.
So locally, we've had quite a few companies on the JSE release their earnings. What do you make of the type of figures that we've received so far, as well as the guidance and outlook?
Yeah, I think we've seen a lot of, I would say, disappointing results out of the JSE. Look, we also need to kind of have a look at things individually and say, why was this result negative? Is it because you've seen PGM prices come off, or is there an operational issue, or is it because of Eskom and power issues that are coming through? So it's not kind of all results are the same. And in that instance, I think it's not always been the same factor, but by and large, I think we have seen some disappointment across the kind of JSE companies reporting in the last little while. Also, earnings are very cautious. So I think the JSE finds itself in a little bit of a kind of precarious position, I think, given specifically the macro headwinds we're facing in South Africa. So it's going to be interesting to see where it heads from here.
Speaking of those macro headwinds, rather, that we are facing in South Africa, what do you make of the companies that have, I suppose, a close connection to the low LSM groups, especially when we look at consumer spending power with that particular segment?
Yeah, so I mean, you make a good point there around that end of the market being a lot more defensive in a very constrained environment, as we've discussed a couple of times already here. But is it protecting them? Again, theoretically, yes, but in kind of practicality, there's a couple of other things that are playing their part. For example, you look at Mr. Price, which is quite well positioned with certain parts of its business, but then they've obviously had the impact of no generators in their stores, and that was obviously led to a bit of a disappointing result a couple of weeks / months ago. So it's difficult to kind of say that if you are in that end of the market, you're going to be safe because of, again, the other macro elements that are playing their part in South Africa, and also kind of global sentiment taking a turn, like we saw with the banking side of things a couple of weeks ago. So a lot going on, and actually quite difficult to navigate this market at the moment.
Which is quite interesting that you brought up, Mr. Price, because I wanted to talk about Woolworths. Yesterday, they did announce that the legal completion of the David Jones sale has been concluded. And I suppose most importantly, that 22 billion rand in liabilities will no longer be a headache for Woolworths. With that said, what do you make of the investment case of Woolworths versus its peers?
Yeah, no, you're 100% right. Now that overhang is kind of gone, and that's obviously positive for the share, definitely positive. The exact price wasn't given, but they mentioned that it's going to be above book value. So again, the overhang's gone. Market is very happy about that. I think the thing then to look at is, do you want to be in this space, or from a kind of discretionary spend perspective, again, in a constrained environment, you've got macro headwinds in South Africa. I think we're happy to stay a little bit on the sidelines for now. We held it for a while. We took profits about 2 months ago in the stock. Again, I'm happy to sit on the sidelines and wait to see where things kind of play out. And it's probably fairly priced at the kind of, call it $66 at the moment. So again, a lot of things going on, positive from a David Jones perspective, but again, happy to be on the sidelines, all things considered.
All right, then on that note, let's leave it there. That is Martin Smith from Anchor Capital giving us his perspective when it comes to the markets. Don't forget that on Thursday, we will give you full analysis when it comes to the Reserve Bank's interest rate decision. We do have a lineup of economists who will unpack the decision, but also unpack some of the challenges going ahead in terms of what we can expect from an economy side, but also what global central banks are doing in their efforts to fight inflation. However, that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.